Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream. We are now in the second quarter of 2021. The year is going by quickly. April 1st, 21. We're back. Today we got three great companies for you. We got Logiq, we have Skylight Health, we have ESE Entertainment. Three stocks that have, they started off and we've already had a nice increase. We're going to find out if these could, really become 10 baggers, 100 baggers. Actually, ESC has already become a 10 bagger. Now we have to have a Logiq that has to catch up to 10x from here, which would mean a really $35, $45 is where kind of been our target for the stock.
Sure.
So for anybody that's just tuning in, again, our goal with Wall Street Reporter's next Super Stock live stream is to bring you those stocks which have that 10x to 100x upside potential. Companies going after multi-billion-dollar market opportunities at a key inflection point and multiple catalysts in place. We've already had, a countless number of 10 baggers so far this year. Including one 50x winner, CBDT. We had 20x, 15x. So let's find out what needs to happen for Logiq to get going, to become that 10 bagger.
Sure.
So Brent, welcome back after that long introduction.
Oh, thanks for having us again. Glad to be here.
So Brent, I want to congratulate you. You just announced that you got the 2020 results just came out. Sure. So the numbers are pretty impressive. With 37.9 million top line,
Mm-hmm.
A little bit of growth. I think maybe the market was expecting, the revenues to increase by 50%, whatever the number. Not that but that's what they expect from tech stocks.
Sure.
But still, even with that said, the stock is only trading at 2x revenues right now, which is like a bargain compared to your peers that are trading at 15x revenues or 20x. So I mean, really, this is a stock that should be, by all means, 40 again 10x. It should be $40 or so. So let's talk about what give us the highlights of the fiscal year. We'll talk about what's ahead. I mean, forget the past is good, so we'll talk about like what some of the improvements, the lessons, etc. But most importantly, I want to talk about really some of the exciting stuff you have now, because really, over the last couple of months, it seems like Logiq has really been building that inflection point. You have these acquisitions that you just made. You have the fintech deal in Indonesia. There's a lot of things at play right now which could really serve as catalysts for this again to be that 10x winner. So with that said, what needs to happen for revenues to increase to basically double from here?
Sure. Okay. So let's talk about that. Let me start by talking a little bit about what we did in 2020 to frame things out for our viewers. 2020 was an interesting year. I know that all the companies that are featured here talk about the impact of COVID, et cetera. I'd like to talk more about the underlying goals, even without COVID last year. We've been in business for 6 years. If one looks back from the beginning, 2015 until 2019, we had quite impressive growth for a small company. We grew 40-50% per year on the top line. We do talk a lot about valuation and the valuation disparity. What I want to talk about now is why did that exist before, and why do I believe it should change now in this year. And what I want to do first of all is talk about the events that happened last year. So firstly, we focused more around improving gross profit margins. That is extremely important because although a number of retail investors like to see this trajectory of top line growth, without underlying high gross profit margins, you're not going to command a valuation that is in line with your peers. If you look at our group, whether it's e-commerce enablement, whether it's fintech, whether it's ad tech, martech, whether it's emerging markets, specifically Indonesia, where we have a strong focus, you will see considerably higher valuations. Now, all of those companies that trade at the 25 to 35, 40x revenues do carry very high gross margins, minimum 30%. Okay. Look, prior to last year, we were averaging gross margins in the mid-teens. Okay. So I think that is a strong reason for why our valuation compared to others was depressed. Last year, however, on the two segments of business that we have, Logiq, which was formerly known as Create App, the best we ever did was 18% gross margins. Last year in the fourth quarter, we improved those to almost 26%. Into this year, we're well into the 30s. We believe that this year we will continue to carry gross margins on the Logiq side of the business in the mid 30% range. So
that should get you back into the good graces of the technical, the classic growth, the tech growth investors that want to see the big margins. So that should.
It should. And what I'd like to also point out is if you look at our Data Logiq segment, when we acquired Push Interactive last year in January, they've grown their top line very well. They've hit all the targets. Their gross margins last year were roughly 17% blended. They exited the year at over 20%. Going into this year, we believe that those gross margins will improve significantly as well because we made an acquisition of a company last fall named Fiscal AI. Plugging Fiscal AI in with Push, plus the acquisition of Rebel AI, which we just closed this week, when you put all those together, you will see gross margin improvement on the Push Interactive side that should comfortably this year go up to probably low 30s. But also with the addition of Fiscal and Rebel, those two businesses carry 70 to 80% gross margins. So there will be significant growth coming out of both of those business units. However, if you integrate them in with Push, the blended gross margins look great. And so this year across the board, we believe we'll see 35% gross margins. For next year, we believe those gross margins will look like 45 to as high as 55%. At that time, there will be absolutely no excuse for our valuation to be at a disparity to our peers. When you speak about the peers, we do get feedback. People say, oh, how can you compare yourself to the Trade Desk or Shopify? I segmented out all the smaller companies that are below $1 billion in revenues. A number of them are below 100 million in revenue. And the average multiple there is 12.5x. So again, a significant disparity between ours at 2.5 and the small companies at 12.5, the bigger ones at 25x. But again, with very strong gross margin improvement and growing the top line and rounding out a business platform on the ad tech side, I think is going to really add up to some great things this year.
Okay, so Brent, let's talk. Actually, I think we should do is for anybody that's new, we should probably give them just a quick snapshot of what Logiq does, and really kind of dive into the new acquisitions, which is Rebel AI, Fiscal AI, because they have AI in the name, artificial intelligence. So we got a clue of what's involved. I know they're in the marketing, but if you can give us kind of an understanding of what they do and how where the synergy is going to come in, into the overall business, and how those two acquisitions are really going to create this kind of the new Logiq, which is the bigger margin, faster
Sure.
growth.
Okay, terrific. So I should be able to dumb this down enough because it's taken quite a bit for me to be able to eloquently explain it. We have brought on a number of new team members this past year, including our new Chief Executive Officer, Tom Furukawa, who has close to 20 years experience in ad tech. Okay. We've also brought on a number of Silicon Valley executives who have worked at companies like Magnite, LiveRamp, Yahoo, Tivoli. These companies in ad tech have set the stage for doing something that is extremely important for e-commerce. So our history is in getting companies online, micro, small businesses, getting their offline business online. Okay, we had a specific focus around using a mobile app to get them online. Here in the U.S., or call it North America, people still use desktop computers, laptops.
But just getting these businesses online, in terms of to create, e-commerce, to create, also, the basic essentially.
That's right. That's right. Now, a lot of our viewers here understand the importance of that. However, what's more important than getting online, because nowadays getting online is basically commoditized. Shopify, BigCommerce, Wix. You can get online any way you want, and there's all different types of pricing plans, et cetera, and some are even free. But getting online is only part of the challenge. It's worked well for us because we operate in emerging markets. But if you look at North America, the bigger challenge than getting online is getting new customers to find you, and then targeting the customers that need and want what you sell. That's extremely hard to do. And if you look at e-commerce,
this is the space of the Facebook and the Google, obviously.
Well, those are the two obvious channels. I'm sorry, the two obvious channels are Google. So people buy keywords, they spend a lot of money for them, and then they use Facebook. But you also look at the ad tech space, the Trade Desk, Magnite, LiveRamp, Inuvo, Acuity Ads. There's 15, 20 companies that are in ad tech, traded huge valuations, huge market caps. Why? And by the way, if you look at their share prices, most of the movement has been in the past 12 months. A lot of them, Magnite included, has gone up 8x in the past 2 months. 8x, Jack. That should be one of your featured stocks. Okay, why is that? And that's because people are starting to realize just how much more important advertising your company, finding customers is, as opposed to just getting online. So part of the reason that we acquired Push last year was to do just that. Fiscal AI, Rebel AI. Yes, AI is in the name. But what does that mean? People buying just on a buzzword is all fine and well, and you can make money that way. But if you dig a little deeper and you understand why AI, what does that mean? Okay, so the platforms we have now, what they do is a shop that is online will use our platform to target customers, okay? So they will use the traditional ways of doing so. So, they'll come up with a number of keywords. We'll come up with a number of keywords. We'll look at their customer demographics. We'll launch a campaign, but the AI component of that is such that when people start to click on ads, start to go into their shop, to the shop, put things in their shopping cart, the user behavior is learned by the machine learning, AI. What does that do? That further defines the type of customers that you want to go after, even to the point where it's distinct customers within a house. So, and not to go on in too much detail, but I do believe this is very important. So everyone's home has a distinctive IP address, right? So whether I'm on my phone in my house, or my other phone in my house, or my laptop, or my Surface, or my wife's on her iPad, or our son's on internet TV, it's all the same IP, right? So my wife could be shopping for clothing, but I could be served an ad on my phone for something that fits the things that she's looked at, but I am not the target customer for that. So that's almost a wasted ad. Yes, it comes to my home. Yes, it comes to my IP address, but how do you really target the people within that home that already reside? Okay. That's what the AI platform through Fiscal and Rebel does.
Okay. So bottom line though, what will those two acquisitions? What kind of revenues are they generating? Like, what kind of business are these two companies doing right now? And how? Okay, what do you expect? What do you expect them to contribute to Logiq?
Well, firstly, we acquired both of them for the IP because
Okay.
in this industry, you absolutely have to have some differentiating factor. So that you can either build it or you can buy it. Nowadays, data scientists who specialize in building these AI platforms command very healthy salaries and bonuses, and it's hard to find. So we took the route of acquiring two very highly regarded companies. Fiscal, there's a membership group around the world called TechStars. Fiscal is a TechStars star. So when we acquired them, it was for the platform. They have a very specialized platform and some really smart people who built it, who are part of our team. Rebel, the same thing. The platform that they've built, and when we integrate Fiscal and push in, is going to be analogous to the trade desk, but the target market that we're going after is different than the trade desk. The trade desk goes after the big enterprises. We're still focusing on small and medium-sized businesses. Getting those on board, helping them get more customers is extremely important.
So you're going to be a trade desk. Essentially, you're going to be what the trade desk does. I think it's TRAD is the symbol, right? So
TTD, correct.
TTD. So that I'm thinking so TTDs. So you're basically going to be the trade desk for small to medium business.
That's what our CEO likes to say. I believe we're going to do it because if you look at that target market that we're going after, there's around 500,000 small and medium-sized businesses right now that are having to compete with Amazon, Walmart.com, Instacart. I mean, you look at e-commerce in North America. 70% of the e-commerce, Jack, is handled by about less than 10% of the e-commerce companies. Right?
Yeah, no, it's like
so it's dominated by them. So how do these smaller players do it? They'd have to spend millions a month just to have the budget to get the best keywords, to get access to platforms and get any attention from Google and Facebook. They'd have to have very large budgets to be a customer of the trade desk. So those are the ones that we're going after.
Okay, so essentially, these acquisitions were really about getting the IP, which is, I guess, this is common in the tech world. It's like Google is they do this all the time. What do they call it? Acqui-hire. Is that
sure?
Essentially, it's an acquisition, but really to get the people and all
yes. That. That's correct. But in answer to your question, so revenues from those two, we believe. Well, we've targeted out anywhere from 3 to 5 million in revenue from those two. Now, again, bear in mind those carry 70 to 80% gross margins. There's a company that we're quite close to. I know one of their founders, and I'm friends with their CEO, Kubient, KBNT. They did their IPO last August. Last year, they had total revenues of under 3 million. They've got a $75 million market cap, so they are trading at around 25 times revenues. I bring that up because the revenue profile of Fiscal and Rebel together are similar to Kubient. But then if you add in Push, we're targeting 21 to 25 million from Push with, again, higher gross margins. The Logiq business, which we're focused around increasing margins, and then Indonesia, we've targeted around, say, 15 to 20 million. And so, again, this year, 40 plus million in revenues with double the gross margins of last year. 2022, we target 55 to 65 million in top line, gross margins 45% to 55%. So I hope I answered your question. And
okay. So pretty much, okay. So that's a relatively conservative number. It's not a crazy number like you say, hey, we're going to go to 100 million. I mean, 40 something million is not is conservative.
It is, and again, I would encourage our viewers and literally anyone to focus more around the gross margin.
Okay, the margins.
Without that, you can have great top line growth, but if you don't improve the gross margins,
okay. So the margins is going to be really the key here. So once you get those tech type margins, which is what everybody's used to, we can see that the valuation gap. Okay. Brett, can you give us an update? What's going on with, I think, okay, so one of the catalysts, I think, for the stock right now is two things. One is, once the stock can get onto Nasdaq, and to get onto Nasdaq, you're doing it in a round, but you do go onto the NEO exchange. You're going to be doing
Yes.
the IPO, so the stock is going to be, which I think is going to actually a very good catalyst for it, because it's going to open you up to the Canadian market, which is it's not huge, but you have a very small float. It's a very the stock is a small stock, so all you need is open up to a few more investors, and I think that can have a big impact on the stock. I mean, we have huge Canadian audience, so I think once you're trading on NEO, we could see some great things happen here. What's going on with the NEO listing?
Sure. Okay. So last Friday we received conditional approval from the NEO. Conditional is essentially two parts. Clearance from the regulators, OSC. We just plugged in our year-end numbers into the prospectus. Our investment banker is working on two comments to turn around, and we expect clearance within the next 7 to 12 days. That's one condition. The other is that we are above 300 round lot shareholders. We've got close to 5,000, so I think we're pretty comfortable there. So yeah, that's rolling along very nicely. Incidentally, since we met the people at the NEO last October, they have doubled the number of corporate listings, and they expect to probably do so again throughout this year. And if you look at the profile of these companies, there's a number of your client companies that are on there. So psych companies in the psychedelic space, a lot of new tech companies. So there's some exciting things going on there.
It's sort of like, I guess they're trying to be like a higher end version of the CSE, basically, like sort of like a TSX essentially.
Well, they are a tier 1 exchange alongside the TSX, okay. But they're more technology focused. They are trying to and accomplishing carving out a niche of companies that are in mega trends on the corporate level, and they handle 25-30% of the volume of the exchange traded funds in Canada. So there is considerable volume there. And again,
and I think, but again, if you can just also explain what the idea is once you're a NEO, that'll kind of make it easier for you to get onto Nasdaq or NYSE.
That's correct. Actually, I have the NYSE application in hand right now, which we just received. Yes. So we'll be going down that road as well.
Okay. So there's a couple of very good catalysts. Let's jump into some audience questions here. Kevin's asking, when does Logiq expect to generate revenues from the partnerships like with Tech Mahindra, KMSB, KMSB is the big fintech deal in Indonesia, which were that kind of government thing there. ShopeePay. When is the big money going to start rolling in?
Good question. Thanks, Kevin. In addition to those that were highlighted, we also just signed a strategic partnership with Comviva, who is aligned with Tech Mahindra and is one of the largest tech companies in South Asia. The reason why they have a specific focus around Indonesia and say that is their number one strategic market of focus. We expect revenues to start being contributed either end of Q2 or first part of Q3. Why is that? For those of you who don't follow Indonesia, probably many, I don't know a lot of people who do. Their lockdown countrywide has trailed things here in the U.S. So most of the businesses in central business districts have not fully opened up. That notwithstanding, we are in the middle of pilots right now. One of the pilots, in fact, is the reason that we partnered with Comviva, because it looks like the scale that we're going to grow to is such that our current e-wallet that we built ourselves is probably not suitable enough for. We have less than 100,000 users on the e-wallet. Once you start to get into the realm of multiple millions, you need something with the ability to scale up concurrent with that. So that was what attracted Comviva to us. So yeah, things are actually going really well there. And with that, I would say that there's been a very large increase in strategic interest this past few months.
Okay. Another question from Kevin. Will revenue so I guess, okay, so will revenue from, the I think you called ATOS ago, right? You called ATOS?
Correct.
ATOS going, ATOS may be reflected in Q1 earnings.
No, they will not. The reason we were not able to consolidate them into 2020 is because the audit's not complete yet. There's not an issue. It is the way that we are choosing to recognize revenue, or RevRec as they call it. A lot of companies there recognize gross transaction volume as revenue. Here in the US, it's better to recognize the commission itself. So your margins, again, talk about margins, look a lot better, 70, 80% gross margins, sometimes as high as 90%. But the revenue number looks smaller. But if you look at GTV, it's in the tens of millions. But I think it's more important to show a revenue number in the way you recognize it and the gross margin attributable to that. So we had to go back and redo a number of agreements with our customers and redo all of that before consolidating. We'll probably start to consolidate in Q2, but again, revenue contribution coming in Q3 and Q4 and onward is probably going to look a lot better as we do that.
Okay, Brent. So let's kind of wrap up here on a couple of key things. First of all, look, what's coming up ahead? I mean, I guess like what else? What are the kind of news? So I know you've been quiet. That's the problem. Is the last 2 months because of the IPO, basically since really December. This is already almost 4 months since you filed into this NEO thing. It's because all the whole quiet period, all this the bank. Essentially, you haven't been able to really talk. I mean, I think there's been you've been kind of had a muzzle on you where you can't put out news. There's a limit to what you can say.
Yeah, here I am.
Here you are. Yeah. So
sure. One thing to be sensitive of is not being viewed as pre-marketing in the eyes of the regulators. We're sitting on about 20 plus news releases. They're timely yet not timely. I mean, when we release them, I think there'll be plenty of enthusiasm around them. We have made a couple of announcements because they're concurrent with filings we've made. We made the Comviva one, Jack, because they were excited enough about it where they were going to release it on their end. And I told our bankers that Comviva is going to announce it, so we may as well. We will make announcements that are material in nature or that are associated with filings. But after we IPO, we will go out loud. And the ones we're sitting on now, they'll start to come out in a steady stream. And I think there's going to be some very exciting things for investors who follow us. Very.
Okay. So I think this is very important. But I hope this is not going to be taken as pre-marketing. But basically, the bottom line is you have a lot of news that you haven't been able to put out, which is in the pipeline.
That's right.
Once you get the NEO thing, once you get this IPO wrapped up, you'll be able to put it out. So I think the stock will basically get back onto the radar. I mean, and back in, I mean, I'm not going to say. I think there's a limit to what I can say. I don't want to sound like I'm promoting or pre-marketing. So, okay, Brent. So on that note, I want to thank you. Great to have you back. And hopefully next time we have you, you're going to be on NEO. So our Canadian audience can buy the stock for their TFSA accounts. That's the big deal in Canada. Those TFSA accounts that's the fuel for the market. So, Brent, thank you again.
Thanks, Jack. Thanks, everyone.
Okay, I just make sure we have the correct date here. Let's get ready for our next presenter. Great thing is happening with Logiq. Looking forward to this NEO IPO. Hang on one moment. Let me just pull this up. Okay, and Skylight. Okay, correct date. Stand by. We're going to have Brad joining us in just A few seconds. Okay. All right. Let me give you this thing here, and we'll have. All right, Pred, welcome back.
Hey, Jack, I love that countdown.
You like the new countdown?
I'm like running in backstage, like Skylight.
Well, that's what we're gonna have. That's what we're gonna have. Once once you're on Nasdaq, you're gonna, and once we're out of the whole quarantine, the whole Canadian thing they got going on ends. Yeah. We're gonna have you come do a live event.
Oh, there we go. All right, I'm looking forward to it. Actually, you know what? Our new board member Patrick actually was really trying to get us to put the next board meeting together in person, and closing on upcoming Colorado here was supposed to be the next location. But believe it or not, Canadians traveling in, it's still not easy. So
right, no, I understand. They lock them in like in prison for a week or whatever. And you got to pay for it. You got to pay to be in prison, like $500. There's some crazy things I've heard. So let's see. Okay, so. I want to start off with again. Let me just do a quick intro for anybody that's just tuning in for the first time. Welcome everybody to Wall Street Reporter's next Super Stock live stream for April 1st, 2021. We are back with Skylight Health, SHGFF, Pred Shaker, the CEO. We're going to find out if this stock has that 10x to 100x upside, like many of our stocks this year have done phenomenally well. So Pred, welcome back.
Yeah, Jack, so excited to be back. Look, I know we're certainly looking forward to a tremendous April. I wanted to get on you guys before the month started, only because, look, there's just a ton of stuff up and coming. I know guys are typically used to seeing something drop on the day of. We're usually on here, but let me keep building that suspense. I mean, it's only going to get better here in April. Okay,
excellent. Okay. It's funny. I was before you went on, I was actually looking at these numbers, and here's the thing which I kind of don't understand. Maybe this is kind of where the opportunity is in the market. So, your comps, which is basically on Nasdaq, right? Because really Nasdaq is your market, right? That's where the stock is.
And it's never been closer than ever. Yeah, sorry, go ahead.
We'll talk about that. Okay, so we got One Medical, that's 1M, ONEM. You got Oak Street Health, right? So these guys are trading at about 15x revenues, right? 15x revenues. Skylight right now is trading approximately 4x roughly. The company, you're going to be doing 56 million roughly now. So
currently
it's less actually, because I'm looking at the Canadian multiple, so it's really, you're about 3x really.
Yeah. I mean, look, there's certainly this major disparity between what our valuation is expected. Yeah.
Let me ask you this: what is it that the market is missing? I mean, is it because you're not on Nasdaq? What needs to happen to close this valuation gap, and how will it be closed?
Look, I think you said it, Jack. The Nasdaq is this major catalyst that's going to be transformative for both the business as well as for the recognition on shareholder value. All right. So here's ultimately, what we consistently continue to come across, right? We're today a Canadian listed company, and we've drummed up a tremendous amount of institutional and value-based shareholder interest in Canada. And certainly over the last few weeks, our investors have been doubling down, and that's the feedback I've been getting. And they've been accumulating positions on a potential, opportunity here for a tremendous upside on the Nasdaq, right? But the reality is Skylight Health is not, we are not a telehealth play. We are not a COVID play. We are not a temporary solution to what is at home, what is otherwise a stay-at-home situation, right? We're playing in this multi-trillion-dollar industry. And here's what's happening. The US, regardless of Skylight Health or not, is going through a transformation. Primary care in the US, family doctors, right? We don't think a lot of them in terms of size and potential. right? And for a long time, they've only been 10% of the total healthcare market, but they are starting to get a lot of attention. And the reason is because insurance companies, who are the major payers for healthcare in the US today, are starting to look at family doctors as the solution to keeping their costs down with expensive hospitals and health systems. And the reason for that is because primary doctors are the linchpin. They're the gatekeepers for over 60% of the healthcare cost. But we don't have this problem here in Canada as much because we have a single payer system. You know, you go to the doctor's office, you never take out your credit card, right? It's literally you go, you get served, and that's the right that we have as Canadians is it's access to healthcare. But in the US, it's a much more complex market. And I think truly the catalyst here that's going to happen on the back of this Nasdaq, and like I said, it's closer than ever. Research coverage in the US will really help to define why Skylight Health is doing this in a very unique position, even against some of these multi-billion-dollar market cap companies like Oak Street Health. Look, there's another company as well, Cityblock, right? Cityblock, again, another company with operations in 4 states. They have over $1 billion valuation. They're private.
Okay. There's a couple of private players, but there's only really 2 public. So it's interesting that it's. So,
but there's going to be more that comes, right?
Yeah. So which is going to help, which I think is going to be very good to bring more eyeballs onto this market. You know, I think also one thing I forgot to add is your peers, which is Oak Street, One Medical, they're trading at 15x, but yet you're growing at a much faster pace than they are.
Right. So here's the 2 differences, right? So we talk about the US market potential, right? What is this US market potential? Yes, we're rolling up clinics. Yes, we're generating efficiencies through scale. But what is the real opportunity, right? The real opportunity is converting these practices from what used to be the old model from reimbursements that insurance companies used to pay for to the new model that insurance companies want to pay for. And that new model—
This is the recurring, basically, we're going to this recurring revenue, the SaaS model.
Which is a 500 to 1,000% plus improvement in the current payment that doctors are receiving in the old model, right? Like Cityblock, for example, they're earning between $15,000 to $30,000 per patient per month.
Wait, hold on. $15,000 per patient?
Right.
Per month?
Yes.
What are they doing?
No, sorry, per year. Per year.
Year.
Not per month. Per year. I apologize. Per year. Yes.
Still, that's a lot of money.
Well, you're comparing it to $200 to $300 a year in the old model, right? And so the real opportunity here is this is a shift that is happening regardless of Skylight Health or not. Okay, but in order to make this successful, you've got the majority of physician offices today that are still within the old model, and they don't have the tools and capabilities to be able to get there. And so Skylight Health is, I've always said this in the beginning, this is one of those unique situations where you can do well by doing good, right? The new model, the capitation, the subscription model, leads to better patient outcomes, better physician health, reduced physician burnout, and it is far more financially rewarding because we are taking on a larger amount of risk in helping insurance companies manage their costs better, right? And so this risk-reward ratio, it's enormous, and this gap is going to be closed. And so where I think that, the Nasdaq really shines a light on Skylight Health's opportunity is with, institutional investors. And we're not talking about small institutions. We're talking about, institutions whose AUM is no less than $10 billion, who are actively putting capital in this market and are looking for those opportunities that are relatively unknown, have significant growth trajectory potential, and that are bringing a direction that is leading healthcare to sort of the new market, which is going to create a more sustainable long-term healthcare opportunity for Americans. And Skylight Health is playing into each of those. We're acquiring at low costs. We are aggressively accelerating because in the last 5 months, for example, we've already acquired practices that generate over 50,000 patient lives. And we are creating an opportunity for these patients to see improved health outcomes while at the same time participating in these high margin reimbursement models that payers are actively looking to participate in. And so this is where I think the Nasdaq, the marketing, the opportunity for the execution that we are delivering on today is going to result in some significant results for obviously early shareholders, but as a business is really going to put us on another level of execution and operations.
Pred, it's interesting. It just kind of dawned on me. I mean, we talked about the subscription model, but it's like now it's really becoming more and more apparent. This is really where this company's at is that this really, because this, again, you're kind of riding this mega wave, this transformational wave in healthcare. And this type of subscription model, it's going to be super attractive for institutional investors because they love predictable streams of revenue, predictable cash flows that they can model. This is like, this is why they love these, the SaaS companies, Salesforce, REITs, what have you, where you have this kind of growing stream of revenues, easy to model, people can understand, they can extrapolate. So this, and there's only really basically only at this point, there's really 3 public players in the space. There's you and One Medical and Oak Street Health. It's crazy.
Well, and I wouldn't even say One Medical is playing in the space. I'd say One Medical is probably still playing more in the Teladoc employer health services space, right? Oak Street is probably really the prime comparison for a company in this market today. And like I said, you're going to see more companies this year. We've already heard of companies like Kano Health and Agilon Health all filing for IPOs this year. Why? Because the shift to this new model is real. And there are more opportunities now to focus on, and we're not talking about, tens and thousands of physician practices. We're talking about hundreds of thousands of physician practices that need to adopt the right technology and capabilities to go there, because this is an insurance-driven market. And it is largely driven by how insurance companies will reimburse doctors. And so doctors really have to choose, am I going to stay in the old model that is going to become outdated and will result in perhaps my practice eventually fading away? Or do I think about how to partner with the right company to develop the right tools, remain sort of the steward of my own ship, but participate in the future of where healthcare is going in the US? And so Skylight Health is the perfect vehicle that, unlike the other companies that are public today or going public, offer the best of both worlds. We give physicians the ability to say, hands-off management, give it to somebody that wants to deal with it, being Skylight Health, but I still want to remain the steward of my ship. I want to be my own physician to my patients, but I want the ability to participate in the future of where healthcare is going. And so Skylight Health is a platform that continues to build more credibility. It's building more traction. We're entering new markets, and we're only tapping into a very large green space where some of our other competitors are saying, we're just going to go to the destination and buy these practices that have already made that conversion, but we're going to pay 12 to 14 times EBITDA for those deals. And so who's helping the majority of practices today, right? So this is why we're so excited for what we're doing, because we're ultimately helping bring the majority of physician practices and patients today into that future of healthcare that will be there over the next few years and as we continue to accelerate this trend.
Pred, let me ask you, so you right now, so you're dealing with you have a couple investment bankers. I think was it Oppenheimer. You got like a Raymond James. You're dealing with really some top players in the institutional space in healthcare. Let me ask you, what is it that they like most about the Skylight story? What's the thing that gets kind of their attention?
Everyone's looking for something unique, right? So there's a combination. This is consistent amongst everything we hear. We're looking for a name that is relatively unheard of, that has significant growth potential, right? And we're looking for someone that's doing it uniquely. And we have a lot of interest from a number of different research analysts at different bank groups, among the ones that you mentioned and more, that have all looked at this story and said, this is interesting. this is interesting because number one, you're playing into a market that is going to be the future of where healthcare is going in the US. Number two, you're doing it in a unique way that is both creating a profitable road to getting there while at the same time aggressively building your market share. And then number three, of course, the entry point of Skylight Health today is significantly lower from a valuation perspective than some of the other comps that are in the market today. And so that becomes a growth opportunity arbitrage, as you might say, for institutional investors that would have had to have paid up to enter into the same companies once they list onto the Nasdaq.
So the key, okay, so the key is basically a couple of things. One is this massive transformation wave that's already happening. We really haven't talked about this part that much before. We haven't talked about this change of this insurance model that much in the past.
Yeah.
But this is the thing that's happening. Mega wave. The U.S. healthcare market is, I don't know, a couple $1 trillion, right? You have so you only have right now the acquisitions you've made. Again, they're coming at a faster and faster pace. I mean, I think when you first came on our live stream, you were doing, I don't know, 10 million, 15 million. I don't know. It was not much. Now you're doing 56 million run rate. And
we have a lot more. Here's the thing. I mean, I know people have been waiting for this news, and I'm going to keep the suspense going. But, there are so many opportunities that we have that are probably the point now where we have to, be more selective, more strategic, because we just have a lot of deal flow. And that's not a bad place to be. And so, I think expecting that acquisition will be a primary driver of growth is not going to stop. And we are going to continually say, guys, our pipeline is robust. We have a lot of opportunities. We have a lot of interesting and unique ways to structure these transactions that will allow us to capitalize on the opportunity. We are going to focus on not diluting shareholders as the only means of raising the ability to do these transactions. We are in a very good position to execute on our pipeline. And then secondly, to your point, Jack, this transformative growth to go from 300 a year per patient to 12,000 plus per year per patient. I mean, this really puts, I'll give you a comparison, right? Oak Street, we use their name, right? Oak Street, they've got roughly 80,000 members today. They generate this year about 1.3 billion in revenue. We have 150,000 patients today, and we generate 56 million in revenue. This is the difference between the old model and the new model. So if we did nothing else, and we stopped growing, but just focused on converting from the old to the new, we would be well over $1 billion in revenue.
Oh, whoa! Right now, based on what you have right now.
Right now, yes.
Just by moving to the new model.
Correct.
I mean, it's not like you're already doing it. I mean,
we're not waiting. We're doing
right. This is part of your whole. This is part of the whole strategy. Essentially, you take them, from the basic, the $300, then you add on the other services, so it's a complete turnkey health solution, if you will. I don't know if I'm explaining it right, but essentially, you're able to 10x the revenues per clinic.
Yeah, that's the potential that sits in our patient base today. But we also know that Skylight's not stopping. I mean, we are continuing to acquire. And so with every acquisition only increases.
Let me ask you this, Brad, let's say you stopped right now, let's say you did nothing else.
Okay.
No other acquisitions. You're doing, let's say, 50 million run rate right now, 56 million. You're saying that if you did nothing else, your revenues with your model right now would get to $1 billion plus within, let's call it 18 months?
I mean, 18 to, I think from a timeline perspective, look at the patient count number. We're nearly double what Oak Street Health has. And from a perspective of future growth, these models are going to continue to evolve, right? And if we have more patients, and I'm forecasting less revenue than what they have, I think that's a very real possibility. And I think the nature of looking at this from both from a return perspective, it is tremendously, from an upside perspective, it's huge. But from a value perspective, right, you're also at the same time improving the lives of over 150,000 patients dramatically from what they're receiving today. And I think that is where, and I've heard this often, I go, from a Canadian perspective to US perspective, how are you continuing to add value? Our focus is, look, we come from a market where healthcare should be accessible and healthcare should be for the patient. And I think we're at a time now, there's an inflection point in the US where we're looking at the same concept where access is critical and the patient first is important. So you combine the two together and you play into a market that is driving more capital towards primary care doctors. You're basically playing into where the insurance companies are asking you to come, right? So this is why I think it's the perfect intersection, right, of capability meets opportunity, and I think that'll result very well for the company.
Okay, so it's basically okay. So this is kind of where you're kind of, would use this Canadian term before. You're where the puck is heading. You're standing where the puck is heading. You're not chasing after. This is where
no system is efficient, and so by no means is the Canadian market itself efficient. But I think there are a lot of positive aspects that you can take from this market and bring to sort of where the U.S. market is looking to go.
Yeah, no, it's so this is a big, mega transformation wave. So really, I mean, essentially the stock right now, based on all these numbers, should be trading, I mean, at $5. I mean, based on the pure valuation. It's just based on what you have now, not based. I mean, and again, you haven't really, Skylight has really not even gotten started yet. I mean, you haven't scratched the surface. You're doing like 56 million. Let's talk about. I think everybody know. We're going to jump into audience questions. This is going to be my last question. Then we're going to go into the audience, which is the main thing everybody wants to hear about is acquisitions. They want to know what's next, the pipeline, what's going on, because that's what gets them pumped.
Yeah, I mean, look, before I get to that, I'm going to touch on one thing first, right? And I'm going to say, to your point earlier, where Skylight should be trading, where it's going, right? And I want to continue to reiterate strength, right? I mean, look, in the last 6 months, we have institutionalized the shareholder base. We have, picked long-term value-based investors that continue to accumulate and support Skylight Health's growth. A good example of this, Jack, is this unlock that so many people were worried about. And I heard this feedback constantly, which was what's going to happen come March 31st when that private placement that was done in September comes free after the extended voluntary escrow. And I told everyone, I said, look, I believe personally, this is going to be a non-event because we knew who participated in that deal. The majority of them were reporting insiders. And for those that had already chosen to sell, would have taken liquidity along the way because they also participated in free trading paper after. And so, long and behold, we hit today. Today's the first official day of that unlock. And I'm not seeing millions of shares hit that market. And from my perspective, it's, look, we have strong shareholders who continue to double down and support the story and will continue to be there, I believe, as we continue to build the story out because we are executing, right? We have strengthened the leadership team and we have added to the board significantly. We have acquired and made acquisitions, and we have shown that the valuation and the pipeline is very real. We have identified that there are already more transactions in the pipeline, and we've announced that. And we continue to say the pipeline only continues to get more robust. And beyond that, we have now decided to show a pathway to where inorganic growth is not the only driver of revenue, but yet there is this important transformative nature of the revenue streams today as we look to participate in where the future of healthcare is going in the US. And we are positioning ourselves operationally to get us there. And so the parallel path of acquisition, integration, and conversion, I believe, will continue to remain to be a transformative opportunity for sharedholders to see ongoing growth with the company. The Nasdaq is only going to accelerate that, in my opinion.
Yeah, and again, it's just like it's kind of, I just find it so frustrating. The stock is not $5 because the model is just so compelling because again, you're starting with this, you got this proven model, you have a system, and then you're buying you're making these acquisitions of very low multiples, very low valuations. Compared to some of your peers that are like in the private equity space, they're paying top dollar for things. So it's really like it's just kind of, I think, a question of timing. Maybe it's once it's on Nasdaq, that is the catalyst. Ultimately, that's probably the thing that has to unlock it, to get it going. But okay, so let's jump into some questions. Here we go. So So I think there's been some talk that you might do a reverse split to get the stock to $4 or $5. What is? Oh, so have you determined when you will be initiating the split?
No, and I will come back to the same concept as I came with the unlock, right? And Jack, your point earlier was, might be frustrating not to see it $5. At the same time, my value investors are more than happy to see the stock here because they just continue to accumulate positions. And even for myself, I had a very short window before the blackout period hit for us with year-end earnings, and I was able to grab some and support the story. And so, look, we are here. We're all long-term. So for us, it's going to get to much more than 5, and we're very much interested in seeing the trajectory of the company grow with strong fundamentals behind it. As it comes to the reverse split, I will say the same thing. This is not a decision to take us and keep us on a listing exchange. This is a decision as it requires us to have the most successful post-listings opportunity as possible, right? We all saw GrowGen go from $3 to $60. That took the right cap structure, the right institutional capital, and the right aftermarket support required in order to make that, along with strong fundamentals in delivery and execution. This is the same formula Skylight's going to follow. So in terms of the decision on the reverse split, to me, this is, again, a non-event. This is what it takes to get the right structure and the right aftermarket support with the right institutions, and I'm talking about multi-billion-dollar asset under management institutions, into the story that are really going to propel this company into the next level as we continue to execute. And so I will say that we're not going to get there until we need to get there. And when we get there, it's going to be with the right strategy in place that's going to result in the best outcome for shareholders on that Nasdaq uplist.
You mentioned GrowGen. Did they do a reverse split to get on?
I don't have the exact details on GrowGen, but they did do their IPO on their uplist onto the Nasdaq as part of the same strategy that we're following. Again, Oppenheimer is the lead. A lot of those institutional capital partners that participated did very well alongside that. Very similar storyline, parallels to be drawn. Of course, a different market, a different sector, but certainly a lot of comparables there. That will
again, just for anybody that may be new, essentially your some of your key investors were involved in the GrowGen story, and so essentially they're kind of guiding you along that same.
Yeah, I mean, look, our one of the strongest and most supportive institutional investors is Merida Capital, right? So they have been there from the day of our IPO to the time that they continue to support us on the back through financing and market access. They invested in GrowGen and they saw a tremendous amount of return. It's a very similar story, and they continue to be bullish on Skylight Health. Also, the principles behind GrowGen are also significant shareholders of Skylight as well. So let's presume that there is a lot of sort of similar game planning in place, which we believe again will result in a outcome that will map a pathway very similar to what GrowGen saw.
Okay, let's see. Okay, so what a couple of people ask, okay, what are the barriers to converting your patients to this capitation model? I call it subscription model. What is what's in the way?
So in terms of the subscription, look, the main thing is laying the right groundwork, right? You have to have the infrastructure in place in order to make that transformation successful. And this is why it was so critical for us to announce some key leadership team members onto our team, because these are the folks that alongside the rest of the team will really bring that sort of focus on organic conversion. So expect there to be more news around key management hires. Expect there to be more news around how we're transforming this. We've been very transparent about talking about what's coming up and as frequently as they're coming up. So certainly there are barriers like anything else with growth, but we're well positioned to be able to overcome those.
Okay. We didn't finish off on the M&A pipeline. What do you have right now? What's in the pipeline? What can we expect in the coming
Look, the pipeline, I'll always say, it is still over 100 million in opportunities. I mean, look, again, like I said, Jeff, this isn't tens and thousands of clinical opportunities, hundreds and thousands of clinical opportunities that are looking for support to make that transition. So, this is not a market that is going to see compression in valuation. This is not a market that is going to see a reduction in supply. This is going to be an ongoing solution. I think I made this comment to you way before. This is an all-you-can-eat buffet, right? Skylight Health's positioned to eat a lot, but we can't eat it all. So we're going to be quite busy for quite some time.
Again, it's like you can go to $1 billion of revenues, and that wouldn't even be.
That's not a stopping point for us.
That's not even 1% of the market.
Right. We're still, I mean, we're aggressively looking to build a multi-billion-dollar revenue organization here, right? I mean, this is not about how quickly can we get to a certain market cap. This is about how fast we can grow a very prominent healthcare company in the US market, which will result very well for shareholders as well.
Okay. Let me see. Let's see. Question: are you concerned with the lack of volume in the retail traders? The current market trends, the paper. Are you concerned? I mean, are you concerned about liquidity? Is that an issue or no?
I mean, look, you're starting to see that volume return. And again, I think a lot of people were skeptical about what was going to happen here at the end of the month with this unlock. And I said
it's across all. It's across all the micro cap space right now. I mean,
you've certainly seen a pullback and a trimming. But what you're going to see is you're going to start to see a differentiation. There's a pullback and trimming, I believe, in companies that may have questionably been post-success in a non-COVID environment. Skylight Health is not impacted. We deal with healthcare. Healthcare doesn't change. People still need to have access. And in fact, after COVID, things have been even more accelerated. So certainly more that we have to keep going on. Hey, Jack, also, I should probably highlight, I do have a very prominent institutional investor that I'm scheduled to talk to here. Okay. So want me to take that call and certainly report back on the success of that meeting.
Right, and then I want to thank you. We'll look forward to catching up on your next big announcement.
Absolutely, Jack. Great to be here and looking forward to giving that update.
Thank you again. Okay, let's, where is Conrad? Hang on a second, let me just see what's going on. Stand by. Where is Conrad? Okay. Okay, Conrad is coming in just a second, so let me just put this, let's see, I'm gonna put this on here. Don't go away, Conrad will be here in just a minute. Here we go. Okay, let me just make sure. live internet. Conrad, can you hear me?
Yes, sir.
Okay, perfect. Oh, can you just I just want to get I guess the camera just get you more in the center. So just I think a lower, yeah, like that. Okay.
Like that,
or no, maybe back up. Okay. Yeah, this is good. Okay, fantastic. All right. We got everything. Let me just make sure we got everything set up here. Conrad, let me just add this one last thing, and we are good. Okay, everything's working now. All right, ladies and gentlemen, sorry about the slight delay. We had a technical issue. I guess there's an email, a link did not follow. Something happened with the email, and here we are. But anyway, welcome everybody to Wall Street Reporters, the next Superstock live stream, April 1, 2021. We are back with ESE Entertainment, one of our top performing stocks so far of the year. It's a stock. What the stock start off at? What, 30 cents? Hit a high of 450 or so, right? So 15x, but we're looking for 100 baggers only here. So stock is going back, so we got a little bit of the usual 50% retracement. I think the audience wants to know that this is the entry point to get in for that next big wave. So Conrad, welcome back once again.
Great to be on, man. I miss you a little bit.
No, this has been this month. We haven't had you on this in the last couple of weeks. It's been a while.
Yeah, I mean, we've just been so focused on building the business. If you guys have been following the story, you've seen the news come out. We've had so much news come out, and even more in the pipeline. And just focused on that 100-bagger billion-dollar market cap goal.
Excellent. So let's actually dive. Let's start with that. I'm going to start with that. So one of the things you said in the last interview, I think actually early on, you were very specific about your goal is to build a $1 billion business, $1 billion valuation for starters, not revenue, but $1 billion valuation. And look, in order to get to $1 billion valuation in your space, in the esports space, you need roughly 100 million revenues, I would say, a run rate of 100 million, right? So, and you have a plan to get there, right? So let's lay out the plan, and then we'll dive into a little. So, what is your plan to get to that 100 million? Where are you now? How do you get there?
Yeah, no, absolutely nothing has changed. The plan from the beginning was $1 billion+ market cap, and we're executing. We went out and signed the deal with WPG, which we anticipate to close literally any day now. So it's just exciting. That puts, their historical revenues were, 14, 15 million Canadian. And then our growth rate as a company is 150%. So, we're already on our way there. Our acquisition pipeline, I've said before, and I'll say it again, there's 100 million in revenue in that pipeline. And nothing's changed there. The only thing is we're making offers. We're going back and forth with the owners, presenting offers and getting close to another deal. So it's really exciting. I mean, the roadmap is crystal clear. We have a definitive plan, and we're going to continue to build. And 100 million, we're going to be lasered in to get there as soon as possible here.
Okay, so Jay James is emphasizing billion with a B, right? Conrad, you there?
Yes, sir. Yeah, you cut out a little bit there.
Okay, yeah, I think we got a little. I think on your end, I noticed there's a little delay. Okay, so basically, you have 100 million right now in revenues worth of acquisitions in the pipeline. You're probably not going to close all of them. You're going to maybe do, I don't know. Let's say you close, 1 out of 5 deals. Obviously you're not going to be paying top dollar or whatever. There were just things don't. So let's say you close 1 out of 5. I mean, there's still you're going to replace the ones with. I mean, there's plenty of deals out there.
Our pipeline is robust. I mean, we're dealing with, we got several offers out right now, and we have several more in the background. So the interesting thing about these groups as well, when you're dealing with bigger groups, they also have targets in mind, bolt-on acquisition that they could layer on to their current business. So, let's use an example. You acquire a group for 20 million, but they already have 2 or 3 other targets that are in a similar range that they want to bolt on to their current business that are all synergistic. So I've said this before, but it's like a layer cake where you're just continuing to add on revenue and revenue. And they're in deep discussions with those groups already. So it just shortens the time to close on those deals.
Okay. And can you also talk about, I think one thing we talked about, I don't think it was in an interview, I think it was just over the phone. We mentioned one of your directors, right, who is he basically, you said like he basically sees like pretty much every deal, or he knows like every deal in the esports space that's out there.
Yeah, no, it's fantastic to have a director that much experience on the board. He's very well known and renowned around the world in the gaming and iGaming space. And yeah, he has a ton of flow coming through the office. And it just helps because it just continues to load up the already existing robust pipeline. So, there's definitely no lack of new opportunities out there.
What? Connor, I want to see what's okay. So this is WPG. This is the acquisition that was announced, I think, early January, right? I mean, I know everything right now takes time. What is taking so long? When is this going to finally close so you can get those revenues on the books?
It's the TSX is backed up. It's extremely busy at the moment, but patience is always rewarded. And like I said, it's coming soon, guys. So don't worry. You'll be seeing some news soon.
But we're seeing this pretty much across the board. Like a lot of things are just taking long. Whether it's things, everything is just
it's taking a little bit longer, but it's ultra positive. We already signed the definitive agreement. We've had extremely positive conversations with the TSX on closing. So, like I always say in my interviews, just follow the news. Everything's coming in. We have a definitive plan. Nothing's changed. We're going to $1 billion market cap. It's just a reality. Look at the news that's coming out. I mean, it's coming out every week with quality stuff. We've brought on more $1 billion partners. So we've surrounded ourselves with more companies that are in the $1 billion+ range. There's a common theme here that we're building.
So let's dive into some of the news. I mean, it's been actually I think we've had a couple of key announcements since you were last on. You have the was it the sim racing? You had the partnerships. You had the JBL. You got a lot of stuff. So give it kind of like a rundown, like what's been happening in progress in terms of in the esports space and all that good stuff. And then we'll talk about the NFTs. This is the hot theme that everybody wants.
Oh yeah.
What is it? What is ESE doing with NFTs?
Well, it's exciting. It's part of our internal group where we got some research and development around NFTs. And I'm, happy to say that our team internally has the capabilities to execute on NFTs. We think there's a fantastic synergy with our professional esports team and our sim racing business unit, where we could capitalize on some of those NFTs. But we're diligently working on that, and we see some great opportunities there. And it was in our last news release, the news release about us launching virtualpitstop.gg. So if you want to go check that out, it's just exciting stuff, man. I mean, you look at groups like Motorsport Games on the Nasdaq. That's a $300-400 million US market cap, and we have that similar business unit in our company. So it just shows you the upside, and we just rolled that out a few weeks ago.
Okay. Okay. So what about in terms of you've been getting some new sponsors, for the team for was it Kick? Let's kind of go through it because I think it's important because the esports team. I mean, we haven't talked about it in a while, but that that could be a major source of value for investors. I mean, because we've talked about esports is kind of the new NFL or what have you. You're seeing, team valuations. Some of the big teams are going for, huge money now. So what in getting the key sponsors, these blue chip sponsors, I think is important. So who talk about some of the new sponsors that you've signed up and all those things.
Yeah, before I even touch on that, it's exciting timing. I'm glad to be on because Kick just qualified for the European Masters. So a European scale tournament, 50,000 plus in prize pool value, and we also advanced for the Apex EMEA tournament, over $260,000 in prize pool available to win there. So they're doing a fantastic job on that side. And then layering on with these big sponsors, we just closed JBL, who's owned by Samsung, who we've been working with for quite some time now. these are massive groups, and it's a scalable opportunity, bringing on these type of sponsors. So, it just shows you once again, as I mentioned, we've signed Nuve, Neosurf, Samsung. These are multi-billion-dollar companies that are joining forces with our esports team and our company. So I think it speaks volumes to what we're doing and where we're heading.
Okay. Okay, so we can talk about the acquisitions. We got the esports. What else is in the pipeline in terms of news flow? Like, what else can we expect to see, coming out, especially in terms of I think again, the NFT thing is a key area of interest right now for everybody. And it seems like it's a very natural tie-in, with esports, because it's it's all on, it's the same environment, the same mindset.
Oh yeah. No, the team's super excited about that side of the business. And like I said, actions speak louder than words, and our news is always very strong. I would just recommend to just follow the news. It's all coming up. The pipeline is really robust, and we have stuff coming out next week, the following week. I mean, we're backlogged on news. That's why I had trouble even getting on the show. It's just we're so busy building the business. We had the best month ever for the company. We're heading in an upward trajectory right now, and things are growing fast. So just keep your eyes to the street. Like, the news is gonna be flowing through heavy now.
Okay. Let's talk about, in terms of the acquisition pipeline. Can you talk about like some of the key, like the sector, or maybe you don't want to go into the details, but can you kind of give an idea of like what area of the esports area are they in? Like what sort of, so people can have an understanding of what the company could look like potentially.
Yeah.
Call it 12 months out. I mean, like, what is it like? If you could talk about like, what is your vision for ESE as an esports company? Is it going to be like sort of like an esports conglomerate, or what exactly is, what's your vision for ESE? Let's call it, April 2022.
Yeah, like I said from the beginning, we're building the world's biggest esports infrastructure company, and we've already built the foundation. It's a proven model. We're going to have great revenues. And now we really want to scale that via technology. So, our acquisitions are definitely going to have significant elements of technology that's scalable on a global level. Why? Because we've already built this fantastic foundation. Now it's time to scale, and now it's time to enter into new regions. North America, a stronger presence there. Asia, a stronger presence there. And really just expand throughout Europe. But the main difference here, like you said, in 2022, there's going to be significant additions to the technology side of the business, but the revenues are just going to continue to pile on because all the deals we're doing are accretive. These acquisitions we're doing are accretive, profitable companies. So you're really going to see revenues just continue to stack on and stack on and stack on, and we're going to build it on fundamentals. And we've already done it to date, and like I said, mark my words, we're going to continue to build brick by brick, but those bricks are going to be big.
Okay. And so, and again, to make clear, like right now, the company, for the most part, most of your operations are in Europe right now. So you haven't really done anything in the US, Asia. So you really have, complete Latin America.
Huge upside
of the world that are still untapped.
Huge upside there. That's what gets me fired up. Look what we've accomplished, right? Look at the historical revenues. When we scale in Europe, then scale in Asia and North America, think about the revenue possibilities. Think about how big this can get. It's a big blue sky opportunity, and we're going to capitalize on it. Other groups are not capitalizing. We are. We're going to hit this hard. And nobody's going to outwork me. And we're going to really deliver over the next 3 to 6 months here, and then really drive this thing.
Okay, excellent. So, Conrad, the main reason we have you on today is because we haven't seen you in a while, right? Even you're closing this deal. You got a bunch of stuff about you. I know you're actually busy running a business, which actually a lot of it's funny actually, like right now, a lot of the CEOs are just tied up. But I just wanted to bring you on so people know that you're alive, right? We have to have the.
I'm more than alive. The one thing viewers are gonna realize very quickly, if I'm quiet, there's a storm coming, and we're gonna come in heavy. So, like I said, keep an eye out. Things are coming.
Okay, because that's the main thing. We're expecting some acquisition, some news, and this is just this. Today was just to have you on. To, hey, this guy's around. Things are happening.
I'll be back. Don't worry.
Okay, excellent. Conrad, on that note, I want to thank you again for joining us, and I'm looking forward to some big announcements coming up shortly.
Yeah, no, guys, follow the story. Be patient. I am grinding 24/7 here, and we're coming in heavy. And next time you see me on here, we'll have lots to talk about.
Conrad, thank you.
Billion market cap, boys. Let's go.
Let's do it. Conrad, we'll see you next time. Thank you, everybody.
Ciao.